Picture this. You're building the most advanced spaceship in the world, but you're using blueprints from the horse and buggy era. Sounds crazy, right? Well, that's exactly what's happening in Southeast Asia's booming data center industry right now, and the consequences could reshape the entire region's digital future. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 950,000 reads and 57,000 likes. I've produced over 900 videos with more than 460,000 watch hours as of May 2025. I also focus on regional and global economic trends. Today, we're diving into a story that could determine whether Southeast Asia becomes the next Silicon Valley or gets left behind in the digital dust. We're talking about data centers, those massive buildings that power everything from your Netflix streams to your online banking. And here's the kicker. While tech giants are pouring billions into the region, the laws governing these investments are stuck in the Stone Age. Let me start with some numbers that'll blow your mind. In the first 10 months of 2024 alone, Malaysia secured our 141.72 billion. That's about 31.56 billion in digital investments. This is triple what they got in all of 2023. We're talking about massive investments from tech giants including Microsoft with $2.2 billion, Google with $2 billion, Amazon Web Services, Oracle, and many others, totaling over 23.3 billion specifically in data center investments. To put this in perspective, Malaysia's data center market was valued at 404 billion in 2024 and is expected to explode to 13.57 billion by 2030. That's a compound annual growth rate of over 22%. Malaysia currently operates 54 data centers with 4.8 megawatts of capacity, and they're adding new capacity at a rate of 429 megawatts annually. But here's where it gets interesting. While everyone's celebrating these massive investments, there's a ticking time bomb hiding in plain sight. The legal frameworks supporting these cutting-edge facilities are older than your parents' first computer. Think about it this way. Imagine trying to regulate electric vehicles using laws written for horse-drawn carriages. That's essentially what's happening here. Malaysia's National Land Code, which governs how land can be used and developed, was last revised in 2020. But its foundation dates back to when data centers weren't even a concept. Here's where things get really messy. The Town and Country Planning Act from 1976 gives local authorities so much power that they can override technical experts from environmental and engineering departments. Picture this scenario. You're a billion-dollar tech company wanting to build a state-of-the-art data center. You've got the world's best engineers and environmental experts on your team, but a local planning authority with no technical expertise can shut down your project or demand changes that make no sense. It's like having a food critic redesign your car engine. The result? Johor State recently rejected nearly 30% of data center applications to conserve water and electricity. That's not just a statistic, that's billions of dollars in potential investment walking away. When you're dealing with the market growing at 22% annually, losing 30% of applications represents massive opportunity costs. And here's something that should worry every investor in the region. If you bypass these outdated processes, you could face fines or even demolition of your facility. Imagine spending hundreds of millions on a data center only to have it torn down because you didn't navigate a bureaucratic maze designed for a different era. The good news is that in October 2024, the Malaysian government approved official data center planning guidelines through the cabinet. But here's the catch. These guidelines are still largely advisory and can't overcome the country's dual governance structure, where federal and state authorities often work in silos. Now, you might think this is just Malaysia's problem. Wrong. This regulatory chaos is spreading across ASEAN like wildfire. Indonesia, Thailand, and the Philippines are all struggling with the same issues: fragmented regulations, outdated zoning laws, and weak environmental oversight. The ASEAN Digital Master Plan 2025 is literally warning that without legal and regulatory reform, the entire region could fall behind in the global digital race. That's not just about tech companies. That affects every business, every job, and every investment opportunity in Southeast Asia. Let me break this down in terms that hit your wallet directly. When regulatory uncertainty increases, it creates what economists call investment friction. Companies need to spend more money on lawyers, compliance, and risk management instead of innovation and growth. For investors like us, this means several things. First, tech stocks and companies heavily invested in Southeast Asian data centers face regulatory risk that most people aren't pricing in. With Malaysia alone expecting to reach 13.57 billion in market value by 2030, the stakes are enormous. Second, countries that solve these problems first will see massive capital inflows, boosting their currencies and local markets. When you're looking at a market growing at 22% annually, being in the right country at the right time could be transformational for your portfolio. But it's not all doom and gloom. Some places are getting it right, and their success stories offer a roadmap for the rest of the region. Singapore has implemented its code for environmental sustainability of buildings, specifically adapting cooling systems for tropical climates. This isn't just environmental virtue signaling, it's smart economics. Data centers in tropical climates can spend up to 40% of their energy just on cooling. Singapore's regulations help companies build more efficient facilities, reducing operating costs and environmental impact. Abu Dhabi takes a different approach with its Estadama Pearl rating system, ensuring high energy and water efficiency in all large-scale developments. The result? They're attracting sustainable tech investments while building long-term competitive advantages. These examples prove that sustainable data centers aren't just possible, they're profitable when you have the right regulatory framework. So what's the fix? The experts suggest a three-pronged approach, and understanding this roadmap could help you identify the next big investment opportunities in the region. First, ASEAN needs to harmonize laws across land administration, planning, environment, and construction. Think of it like creating a common currency for regulations. Right now, a data center company needs different legal strategies for each country, sometimes each state. Harmonization would reduce costs and accelerate development. Second, countries like Malaysia and Indonesia need better coordination between federal, state, and local governments. This isn't just about efficiency, it's about creating predictable investment environments that attract long-term capital. With Malaysia's current annual capacity additions of 429 megawatts, streamlined processes could double or triple this growth rate. Third, ASEAN should create shared sustainability standards for data centers, linking them to global ESG benchmarks. This is huge for investors focused on sustainable investing, which is where the smart money is heading. Here's where this gets personal for your investment strategy. The countries that implement these reforms first will become magnets for tech investment. We're talking about potential returns that could dwarf traditional market gains. When you have a market expected to grow from 4 billion to 13.57 billion in just 6 years, positioning yourself correctly could be life-changing. But this isn't just about money, though money is important. Data centers are becoming the backbone of the digital economy. When regulations slow down digital infrastructure development, it affects internet speeds, access to services, and job opportunities in the tech sector. Think about it. Every delayed data center project means slower internet for millions of people, fewer tech jobs, and reduced competitiveness in the global economy. The social cost of regulatory failure extends far beyond corporate boardrooms. Here's what most investors are missing. This regulatory mess creates incredible opportunities for those who know where to look. Companies that can navigate these complex regulatory environments will have massive competitive advantages. Countries that fix their frameworks first will see explosive growth in their tech sectors. The ASEAN Economic Community Blueprint 2025 calls for predictable, transparent, and harmonized regulations to attract infrastructure investments. But progress has been glacial. The window for ASEAN to establish itself as a global tech hub is closing, and the countries that act fast will reap the rewards. For investors, this creates a clear timeline. The next 12 to 18 months will likely determine which Southeast Asian countries emerge as tech leaders and which get left behind. That's not a lot of time to position your portfolio for maximum benefit, especially when you're looking at markets growing at over 22% annually. So what should you do with this information? First, start paying attention to regulatory developments in Southeast Asia. These aren't boring bureaucratic changes, they're the foundation of future economic growth. When Malaysia is adding 429 megawatts of data center capacity annually and expecting to triple their market size by 2030, regulatory changes directly impact these growth trajectories. Second, consider how data center investments and regulations might affect your current holdings. If you own stocks in companies with significant Southeast Asian exposure, regulatory risk should be part of your analysis. Third, look for opportunities in companies and countries that are solving these regulatory challenges. The winners in this space won't just be the biggest tech companies, they'll be the ones that can navigate complex regulatory environments most effectively. The future of Southeast Asia's digital economy is being written right now, in regulatory offices and government buildings across the region. With Malaysia alone expecting their data center market to more than triple by 2030, the question is, will you be positioned to benefit from the changes ahead, or will you be reading about missed opportunities in next year's headlines? Don't forget to hit that subscribe button and ring the notification bell so you never miss an update. And if you found this analysis valuable, check out my video on how Singapore became Asia's fintech capital. It's a perfect case study of how smart regulations can create massive investment opportunities. Speaking of staying ahead of these trends, if you want daily insights delivered straight to your inbox that dive deeper into these critical economic shifts before they hit the mainstream, consider joining my premium membership for just $1 a month. You'll get detailed analysis of regulatory developments, investment opportunities, and risk assessments that could help you spot the next big opportunity before the crowd catches on. My premium members have access to exclusive content that dives deeper into these regional economic shifts, complete with actionable investment ideas and portfolio strategies. For the price of a coffee, you get insights that could transform your investment approach and help you stay ahead of the curve in this rapidly changing investment landscape. The link to join is in the description below. Until next time, keep investing smart, and I'll see you in the next video.